Hello, mortgage fans. Right, so for this week's update, we look at what a start it's been to 2021. To give an idea of how strange the world is right now, I understand that Bez, the maraca shaking, chemically fueled dancer from Happy Mondays, is starting up a fitness cast to sort of rival Joe Wicks during this lockdown. So if you wanted any idea of how weird things are, that's pretty much it there. So we sort of get back into the whole homeschooling routine, all trying our very best to be classified as a key worker. I know we're certainly going to try that one. So we've got a bit of time ahead of us with all this sort of stuff going on. So what I've looked at is, beyond all that stuff, the headlines, the negativity, is just looked at purely the state of play in the mortgage market, which actually sort of broadly quite positive. So the two things that really came out last week, first was that of smaller deposits. We've got HSBC and Barclays coming back in to support people with a 10% deposit. So they're two massive lenders making a big impact to help people buy. So that can only be a good thing. But where the mortgage gods giveth, they do taketh away. If you're self-employed, things are getting a little bit tougher. I do feel this one's a bit of a knee-jerk reaction to the market because both Halifax reduced their what they call loan-to-income ratio, so they're slightly decreasing the amount of money they'll lend to self-employed people, and Santander have cut their loan-to-value right down to 60%, meaning that you need a 40% deposit to get a loan with them if you're self-employed at all. Again, bit of a knee-jerk reaction. I think things will ease in time. I mean, specifically with Santander, they've been very supportive of people who are self-employed all the way through this. So that's to be celebrated, really. So I think with Santander specifically, it's more a case of they're extremely behind on their processing, so that's a problem. They probably feel overexposed. They're just trying to kill two birds with one stone in that self-employed applications take the most time to process and are the riskiest, quite frankly, right now. So I think that's just a reaction to that one. That'll ease out. So if you are sort of self-employed, still loads of options. Not like the market's closing up on you, but they are sort of two changes you need to be aware of. The other debate, also the second main point I want to talk about today, is that of negative interest rates. That whole debate seems to have reared its head again. Morgan Stanley came out and said they expect interest rates in the UK to go to zero when they meet in February. Some other people are saying it would go lower than that. I've talked about this quite a lot. I would be very surprised to see negative interest rates in the UK. Then again, nothing surprises me anymore, but I would be very surprised. The two sort of things I look at, the sort of indications of that, will be money markets, which have all pretty much stayed flat last week, so no major movements there. And also the FTSE finished up last week as well. So they're two big indicators of where things are going. So no major market movements, no sort of panic. It doesn't look like anything's moving in that direction. Let's just sort of wait and see. Even interest rates moving to zero, if Morgan Stanley are correct, is just, and it's more symbolic more than anything else. It doesn't really have any impact, certainly on the mortgage world. The impact on sort of mortgage pricing right now is all about capacity. So it's more about, can banks actually process applications, because that's what's driving pricing. So with the pricing side of things, like I say, money market's all pretty flat. We'll put that on the update on our website, so have a look at that if you want to see the actual numbers. And mortgage rates all sort of holding firm, really. The best rates you can get around start from 1.04. Now, the exact rate you'd be offered will be dependent on your circumstances and deposit, and you should speak to an advisor like us to help determine that. But that just shows you how cheap lending is at that level. Even up sort of the 90% mark, interest rates you can get sort of around sort of 2-3%. So it's all pretty cheap across the board. So they're the main two things this week. Everything else, please do look at news on our website, and if you'd like to get in contact and talk through anything mortgage related, please do.